I'm ready. Welcome everybody. My name is Mackenzie Bode. I am CEO of Team Fire Orange. I just want to thank you for taking the time to be here today and I'd like to welcome you on behalf of our leadership team for being here for the 2028 shareholders meeting. Today we're going to be covering a brief history of the development of our company over the past 10 years, as well as the financial statements and past operations for 2028, and finally what's going to take us into the future. As CEO, I am very proud to be part of this company. We keep growing and expanding into our potential to be industry leaders. And Team Fire Orange, we have spent so much resources and money and time into understanding and researching our products, our consumers, and what it'll take for us to provide a bike that can be for everyone any day and in any place. Through our 10 years, we've had a lot of successes and great victories, but we've also gone through struggles and hardship. But it's our resilience as a company that has formed our goals to make us better looking forward. Our goals for 2029 are to cut production costs. We're going to do this by improving our current products to minimize our prime cost per unit, and that will minimize our costs as well as increase our profits. Our second goal is we are going to improve our plant efficiencies from the current 94.3% to 97%. And this is important because as our demand grows, as our factories and our workforce grows, efficiency is more important than ever to keep up in this competitive environment. And lastly, we're going to continue building and developing our culture internally and externally. We want to continue pushing teamwork and innovation within our company on all levels, as well as maintaining those external relationships with our stores, with our suppliers, with our alliances with Whitney Houston's, and with our competitors. Now to move on to an overview of our development as a company over the past 10 years, we started wanting to provide quality bikes in the adventure, commuter, and racer markets. We were then approached by the Whitney Houston's, a current competitor, and they wanted to align with us to divide the market share so we could both excel in our own markets. This worked, and we ended up launching in the adventure and the commuter segments and gave them the racer market. A couple years later, they bought our company, and what started as an initial surprise turned into a flourishing, healthy relationship where we both helped each other grow and succeed within the markets. We then launched, along with our commuter and our adventure, a kids bike and a leisure bike, which were leading in market share over all of our competitors. Moving forward, despite our great success with market share and high sales, our shareholder value wasn't where we wanted it. And so as a company, we looked at our strategy as a whole and decided we needed something that would increase our competitive advantage in this market. And so we looked at and decided to invest in purchasing Team Herbert Zella. However, the outcome of this purchase wasn't what we expected. Our relationship with them, as well as the initial investment and future investments, we couldn't carry through with those. And so weighing the opportunity costs, we decided that we would sell them and continue investing and growing our company first. Looking at our financial statements, our income statement shows that our total gross profit was lower than a majority of our competitors, and that's why we're looking to minimize our costs. But our highest expense was marketing, which positively reflects on our market share. To take a closer look, our net income for 2028 was $10,960,143. Moving on to our balance sheet, we do have higher assets than we do liabilities, and overall our company is financially balanced and stable. To take a closer look, you can see our assets and our liabilities and equity line up at $97,693,424. Moving forward, our cash flow statement over the past few years has showed a price increase over the last few years, and that holds true for 2028. However, we do see our experience with Herbert Zella to be a potential loss. We wanted to invest in them, and that would come around and help our assets. But again, that opportunity cost, we've decided to invest in ourselves. taking a closer look, our ending cash balance for 2028 was $86,409,686. And now I'm going to pass it on to our leadership, Sam. He's going to reflect on our past operations for 2028 as well as what's going to bring us into the future.
Thanks.
Thanks, Sam.
So looking back at our past operations, although our shareholder value wasn't quite where we wanted it, there are still some things that we did well. We had high market shares and a lot of profit. However, because of our high costs when it came to production and manufacturing, this made our profit margins smaller, thus leaving us with a lower shareholder value. One of our biggest surprises along this whole journey was buying Team Kerber-Zella. We knew that we weren't doing as well as we wanted to, and we thought that we had to make a bold move quick, and it was kind of a spur-of-the-moment decision to go ahead and purchase them, which in the end may or may not have worked out well, but it is what it is. One thing is that we would change is develop better strategies to increase shareholder value, whether this be paying off debt or decreasing margins or decreasing expenditures like I mentioned before. We would have rather spent more time focusing on that than worrying about other teams and purchasing people and whatnot. And one of the best decisions was what led us to having these higher market shares and pulling in a lot of profit. Moving forward, like I mentioned before, we focus on our company and not others. And we do this by increasing our efficiency, by investing more in our workers and worrying less about other teams. We would also minimize our spending by reducing expenses on production, as I mentioned before, optimizing that number, and then also price pointing our marketing. Because if we spend too much on marketing, you could double your marketing expenditures, but then not necessarily receive any gain from that. And then lastly, reduce the number of markets we're in. I think one of our biggest flaws was we were having high costs when it came to production and quality of the bikes, because that's what we needed to produce a good adventure bike. However, for leisure, commuter, and kids, the other segments we were in, didn't require that high of a quality. So this might have been a point that threw us off, whereas we should have either focused on adventure and racers, strictly just those two, or strictly on the other three more lower quality bikes. Nonetheless, it's been a great 10 years, and I'd like to thank all of our shareholders for supporting us through this journey. Thanks.
Can we answer any questions that any of the shareholders have about this past year or going into the future?
Yeah, I actually do have some questions for you all. The first one is your cash position tripled from 25 to 26, and some of that would have come from selling Kerber-Zella, I would think. Do you know where the rest of it came from? Because that seemed to be a pretty big jump in cash.
What was the jump again?
From 2025 to 2026.
And that was the rollover that we sold them?
Yeah.
I think that rollover, we also had an increase in market share. And we also launched our modified adventure bike, if that's correct.
Okay.
So hopefully.
So you'd started lowering your expenses at that point already.
Yes.
Why did you choose to wait that long to lower your expenses on a per unit basis? I was really curious about that.
I think it kind of just took some time to realize to pinpoint that as a weak spot in our whole strategy. It was kind of in the later end that we kind of realized that we were spending too much, and that was part of the reason that our shareholder value was where it was.
So it's just a matter of digging into it. One thing you were mentioning about the marketing, and you felt that maybe you should lower it. I do want to ask, as a rough rule of thumb, you should be spending about 30% of your previous year's sales on marketing in the current year. Did you guys ever get there that you were doing that? And if you're lowering that number, were you over it already?
I believe the last few years we were hitting that 30% mark of our previous sales.
Okay.
It's more just in the future we want to find the perfect balance of spending enough on marketing but not overspending on it, and which bikes and where to put that marketing.
Okay, cool. Because I was looking over your stuff, and one of the thoughts I had was that you might have looked a little more closely at your advertising spend. I was a little concerned that you weren't doing hard math on where you were going to get your most mileage out of your dollars, because you were asking me, well, what's going on? And that was one of the places I thought,
We did have to make a compromise in our last rollover because we were in debt from selling Herbert Zella and also repaying our loan to the Whitney
Yeah.
Houstons. We did have to cut some of our marketing more than we would have liked to.
So speaking about that debt, I don't think it was to Whitney Houston's advantage to lend you guys the money, actually. It didn't help their position much. So the question that comes to my mind is, why didn't you guys just borrow the money to make the purchase instead of having that team lend it to you? You could have just gone to long-term debt and borrowed the money there, and also let some of it run into short-term debt if you needed more. What was going on there? And I guess between the two teams, it'd be nice if they were here too, so we could talk about it a little bit more. But that's okay. It can't happen. It can't happen. Did you guys ever think about just saying, well, why don't we just borrow the money ourselves and let them have the money and not get into debt for your guys' purchase?
I think there was an initial confusion. The purchase of Herbert Zella was kind of quick, and at least from my understanding, they had a good amount of money to give us, not in a loan. It was actual cash. And so I thought we were getting most of it, that we would still repay back, but I didn't realize they were taking out a loan as well.
Yeah.
And so I think miscommunication and rushing into a decision was part of that.
Okay, yeah, those kinds of things, I mean, $90 million is not like a small amount,
No,
really.
it's not.
And you want to be careful with that. I mean, I know you guys were kind of, we want to do something fast. And that's fine. I mean, I think from what I'm hearing, you decided in the end that that's not necessarily where you really wanted to go, but you tried,
And
right?
we're very thankful for the Whitney Houston being willing to, help us out, and we tried to pay it back as fast as we could because
Yeah.
we put them in such a bad position.
Yeah. I'm going to kill this because we're chatting and I don't want to take up too much time.